Shares of Indian IT companies turned tepid towards the end of the previous week as the July to September quarter results underlined persisting demand worries. Shares of IT giants Infosys and Tata Consultancy Services, for instance, declined up to 4% in 2 days ending October 13, while those of HCL Tech rose less than 1%. By comparison, the Nifty 50 and Nifty IT indices fell 0.3% and 2.2% respectively during the period. The drop came after Infosys slashed its revenue growth guidance to 1 to 2.5% in constant currency terms from 1 to 3.5% for FY24, while HCL Tech trimmed its revenue guidance to 5 to 6% from 6 to 8%. Besides, employee headcount decreased across the board as companies went slow on hiring to defend margins. Yet, analysts believe the worst may be over for IT stocks.
TCV, that is total contract value of deals obtained during the quarter, grew remarkably in case of Infosys and HCL Tech on a sequential basis. However, key monitorables include the period of execution of these deals and any customer-induced delays in execution during the course. Given the large deal wins, we do not foresee a large fall in the stock prices of these three companies. And at the same time, upsides also seem limited in the near term.
TCS's order book stood at $11.2 billion at the end of the second quarter, while total contract value for Infosys stood at $7.7 billion. For HCL Tech, net new bookings in the quarter touched an all-time high of $3.96 billion in total contract value. Against this backdrop, analysts believe the pack remains a beacon of strength despite macro headwinds.
With the demand of digital transformation being strong across the world, the IT sector will continue to stay in focus in the next few years. But right now, a number of supply-side issues, wage concerns as well as attrition is sort of causing concern for the sector. The deal pipelines are strong. The accelerated growth of digital transformation across the world is strong. Indian IT is focusing on AI, and this could be quite interesting for the sector.
So, where are IT stocks headed from here on?
Technically, we believe that the Nifty IT index has entered a correction mode, and we believe that it can drift towards 30,640 to 30,300 on the downside. We believe that HCL Tech is one stock which can be bought at current market price for a target of 1400 with a stop loss placed at 1180, while TCS is one stock which we suggest to buy on dips.
Overall, after a tepid sectoral growth in FY24, analysts believe strong inflow of multiple deal wins this year and possible macro recovery over the next few quarters should aid green shoots of growth in FY25. On October 16, markets will react to HDFC Bank's Q2 FY24 result announced over the weekend. Besides WPI inflation and Q2 results of Federal Bank, Jio Financial Services, Bank of Maharashtra and Yatra Online will be on investors' radar.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.